Okay, so good morning, everyone. Welcome to the Macro Snapshot. We are, what are we? Wednesday, April the 23rd, 2025, recording this about 7:30 in the morning. Okay, so let's just have a quick look. There were quite a lot of sort of comments yesterday, which we need to look at. First of all, from Trump. Trump yesterday afternoon, late, I think it was about 5:30 or so, he essentially said that he had no intention of firing Powell, that he, yes, wished that Powell would be more proactive in reducing interest rates. And he was a bit annoyed about it, but essentially said that, the market had got it wrong, the journalist had got it wrong, and he had no intention of firing Powell. So that was a positive in terms of sentiment for the market. We also had a leaked kind of conversation, which Scott Percent on Monday, or maybe yesterday, Tuesday, it's not sure, to JP Morgan, sort of people at JP Morgan, essentially saying that the current situation with China, with like this sort of trade embargo, was unsustainable and that there would have to be negotiations soon. That was actually backed up by Trump at the same sort of press conference where he spoke about Powell. Trump himself yesterday afternoon, late, said something to the effect that he loves China, probably is going to meet with President Xi Jinping, and that the tariffs would not be anywhere near 145%, but they wouldn't be sort of a zero either, but it would definitely open to negotiate. So that was all kind of quite positive. And then what we've seen over the last couple of hours, there's been some sort of comments from the Chinese sort of trade ministry or something, essentially saying that, as long as there is mutual respect, China would consider possibly sitting down to the negotiating table to talk about sort of tariffs and trade. So all that to say that there's quite a lot of positivity. And what I want to look is just the micro structure of the market in a second. The other thing which I just want to mention in terms of all the sort of the gossip and all the comments is that we had a pretty weak Tesla earnings after the bell yesterday, and despite that, the Tesla shares rallied like 6 or 7%, and I think part of that what was the fact that Musk, when talking about his activities with Doge, and when questioned whether his attention was divided, essentially said that he'd be stepping back significantly from his activities with Doge, and that would be much more present with Tesla from going into May. So the question, apart from maybe that's good news for people who own Tesla shares, if Musk is more focused, it also means less focus of Musk on Doge, and in general, you have to say that the sort of the talk around Doge seems to be quieting down a little bit, and I just have the impression that going back to that narrative of a month or two ago that the Doge, the Department of Government Efficiency was going to slash the U.S. deficit by hundreds of billions of dollars. It just doesn't seem to me to be realistic, and there's been quite a lot of pushback. Also, for example, I was reading something yesterday in the Department of Defense, a lot of pushback against Musk about sort of cutting sort of jobs here and there. So for sure, there's probably going to be some sort of cuts to jobs and some deficit savings, but nothing, in my humble opinion, from what I've seen anyway, just the reading I've done, of massive deficit cuts. So all that to say that the US will continue to need to issue a significant amount of bonds, especially long-term bonds, especially if there's some kind of sort of slowdown in the real economy, which will necessitate sort of extra sort of social benefits combined with less tax income. So all that to say that I do feel the pressure on the back end of the curve, from a structural sense, will remain, is the point. But overall, a little bit of positivity this morning. And just what I want to look at here, it's just sort of it's kind of interesting just to see at the 6 p.m. Futures open last night. Just want to look at this microstructure here, which I was looking at just on a short-term charts here, 3 minutes. You see here S&P minis, and you can see here it gapped up quite a lot, about 250 ticks. I think it was about 60 points or so. Sort of tested around a little bit, and as you can see, is grinding higher. So definitely the stock market, the US stocks are liking that. We can also see that reflected in the NASDAQ because of the, you see NASDAQ here, similar kind of price structure here, gapped open and then pushing higher. NASDAQ outperforming a little bit. You see NASDAQ here up 2.92% versus the ES up 2.5%, probably based on the fact that the Tesla shares are doing quite well, as I say, on this refocusing of Musk. But other things I just want to look at here is kind of just interesting to look at some of the currencies and the bonds. Now, this news that Powell apparently will not be fired by sort of Trump. The market took that in a sort of a hawkish way, but in a way which would be a sort of inflation fighting. So we can see here what happened at the open. This is the ZT, so the 2-year bond futures. You see here they came down, they opened down pretty dramatically and had a bit of a nasty sell-off for at least 5 or 10 minutes. Have subsequently sort of clawed their way back, but definitely look at the 2-year here. What I want to point out here, compare that to something like the ZB, which is the 30-year bond. And you can see, boom, that did not gap out down at all. It actually gapped up and has continued to rip much, much higher. So complete outperformance here. And what you can see here is like a sort of a big flattening here. And essentially what's going on here is, if we go back to the ZT here, is that the market's saying, hey, Powell will remain in his office. Powell is quite hawkish in the sense that he's quite strongly fighting inflation. So that means less potential rate cuts, at least from a mathematical perspective. And so the front end of the curve not liking that, the prospect of less rate cuts and a more aggressive fight on inflation. On the other hand, if you look at something like ZB or even more like the ultra bond here, like the true 30-year bond, it loved the fact that Powell would be staying in office and would be combating inflation more, which of course means ultimately that's a positive for the long end of the curve, and could also signal a willingness of the Fed to allow for a little bit of a slowdown in the real economy. So all of that is positive for the curve. So the long end of the curve. And so you see there just how that's reflected. We're getting this sort of flattening here. If I just can put up here, let's say 230s, you see that it gapped down and then you see like a pretty aggressive sort of bull flattening here. So the curve flattening on that Powell news. Just other reactions, which is very, very interesting. And again, it's just like to put in the memory bank, is just how the currencies sort of reacted. So you can see here that on that news here, the euro actually went down quite a lot. So the dollar actually initially got quite a lot of strength, at least against the euro, but the euro has subsequently sort of pushed its way back. You can see the USD versus the Japanese yen. Again, just focusing on this opening reaction here, you can see that the US dollar pushed up pretty hard against the Japanese yen, which has subsequently given it back. So just interesting in terms of what's happening with the yen and the euro is that, and I guess also on the Swiss franc, you see the same thing for the Swiss franc here, being sort of pushed, the US dollar going up against the Swiss franc, but again coming back. So we see that any sort of good news on trade and sort of a confidence in the US is very much being sort of reflected in strength for the US dollar against the euro, the Swiss franc and the Japanese yen. The Swiss franc and the Japanese yen, for me, that's sort of normal. It's like a safe haven kind of situation. But what's also interesting here, just getting back to the euro, is that the euro, which ordinarily should benefit from positive trade news, at the moment is trading also like sort of a more liquid, almost like a semi-safe haven. Sort of interesting to look at that. But just on this extra sort of positivity this morning, if we look at something like the Australian dollar, you can see that initially that sold off against the US, but now on this risk on tone, the Aussie dollar is actually having a sort of a nice push upwards. Similar kind of situation here with the New Zealand, this time on the futures. You see the New Zealand dollar pushing up, and even CAD, sort of showing a little bit of strength. Initially, just for like half an hour or so, the US dollar showed some strength against CAD, but again, CAD sort of showing a little bit of strength. So interesting just to note there what went on. Also, if we look in terms of risk as well, no surprises that gold on that news, gold sold off. You see here gold gap down, but again, subsequently sort of, a bit bouncy, but basically gold selling off quite hard on that. So, which is no surprise in the safe haven. Other thing as well is just on oil. Just want to, and again, I'm just trying to look at everything just to see how all of the various sort of instruments have reacted to that sort of news, just as a future sort of reference. Sorry, where's my oil here? Oil. Yeah, this is crude oil. So you see here oil gapping up and continuing to sort of hold a little bit of a bid. Okay, so let's get back to the daily charts here. So again, just in terms of where things could go, we see also that the volatility is down. So VIX actually has broken down below that pretty key level, which is around about the 30 level, and you can see that it had been hovering around there, bouncing off and down, but it's now broken down there. So all things considered, that should be a positive in terms of the US equities today. And we can see here on a daily chart, this time on the daily chart, you can see that the ES, has broken above this sort of little downtrend, and most probably is going to head back, I would say, to this 5,500, 5,550 kind of level up here. Again, starting to keep an eye on things. Not only is this a bit of horizontal resistance, but this is the level here. Now, the point is this level here, which is basically 5540-ish, something like that. That is the top from the 90-day trade reprieve. So remember, just the sequence of events here is that Trump announced these punitive tariffs. The market sold off. Then he said, "Oh, actually, there's going to be a 90-day reprieve," and we got up to these levels here. So that's the level where I think the equities might get to. Let's say 5530 on the front contract of the ES, 5530, which is absolutely doable, today and tomorrow, for sure. But I think then the market might take a little bit of a pause, because at that point you also have the gap of when trade Liberation Day gap of April the 2nd and 3rd, which is this sort of orange box here. So I think this kind of level up here, I'll be looking potentially to enter a short, unless there's very strong sort of headlines against that, and it is difficult at the moment with all these headlines. But that's kind of a key level. So I expect the stocks today maybe to just push up, grind up a little bit higher, assuming there aren't any sort of negative headlines. But then I think the market might stall out there. In terms of other things, we see the Mag 7 again could get a bit of a push up. You see trading pre-market up a little bit, the overall Mag 7 basket. As I say, despite the fact that Tesla had pretty horrible earnings, Musk was very sort of upbeat on that, and essentially said that his full focus would be back on Tesla. So the Mag 7 sort of ETF doing quite well. And maybe it's got to sort of push up a little bit more today. Equal weights also doing quite well, opening up higher, as you can see in the pre-market, looking quite strong. In terms of over in Europe, we had Eurozone PMIs. They were actually mixed in the sense that some commentators had thought they would be horrible, based on the, sort of the Liberation Day tariffs and whatnot. But actually, they were quite mixed. And in fact, in manufacturing in France and Germany, the Eurozone PMIs, which are just survey data, but they're actually a little bit better than feared. And so what we see on that is, again, plus the US sort of optimism, a little bit of optimism in European stocks. So we see the Euro Stoxx 50 bouncing up. We also see in Germany doing pretty well. On the other hand, if we look at the bond market, what's interesting is to see that the German, the Bunds, so down a little bit. So you can see here how this is acting is that the German bond, especially the long end of the curve, and you see here the Buchsel, the long end, actually not sort of reacting a little bit more on European sort of economic performance, whereas the US bonds seem to be reacting more in terms of sort of trust in the US system and the ability of the Fed to remain independent and to combat inflation. So we see here, as I say, the Bund and the Buchsel down a little bit, the 5-year down, and also the front end. So you see here the front end coming down a lot more in Germany, basically on the idea that with the stronger economy, maybe the ECB doesn't have to be as strong, as dovish, I should say. So interesting what's going on there. Other things to look at here, guys, just looking again at the US bond. You see the front end at this point is relatively unchanged, but if we go out to the 10-year, quite liking this sort of stability with Powell and everything, and then you look at the 30-year, pretty strong performance. So as I say, a bit of a flattening here, which should be good for the equities. Oil continues to grind upwards. Again, I'm not convinced this is going to probably face a little bit of a resistance here at about 65.5. Is this some kind of bear flag again? I think ultimately, from what I've been reading about the physical market, the front end of the curve is still in a backwardated state. So the physical market is still, it seems, relatively tight. Last night from API, or yesterday afternoon, I should say, we did get a drawdown from API, which was pretty good supportive numbers. So, all of that's a positive for oil. On the other hand, we know that OPEC is holding back a lot of production. And some of this positivity is also based on increased compliance by OPEC Plus members to not cheat. So they're actually abiding by the guidelines and not overproducing. But at the end of the day, this is an artificially induced sort of balancing of the market. This is not as though there's a huge demand for oil. This is artificial. This is, OPEC deliberately holding back supply. So the market knows that there's plenty of spare capacity. And I just think, and the only way we can have a truly sort of bull impulse at this point, and by bull impulse, I mean, pushing above, let's say 65, 50, 66, something like that, and certainly breaking these levels up at 72. There has to be, a resolution to the trade deal. There has to be good earnings. There has to be a lot of things, and we're not there yet. And part of what Besant said yesterday behind closed doors. And keep in mind that Besant from the Treasury is speaking today as part of the Washington International Monetary Fund meetings. I think about 10 o'clock. It's going to be very interesting to see what he has to say here. But I think just in terms of oil as well, this idea of Besant's is that the trade negotiations are going to be complex and they're going to take several months. It's not going to be a quick fix of like, hey, on Friday morning, everything will be kumbaya and fine again. So therefore, I think until we get that kind of medium-term resolution and clarity about tariffs and global trade, and indeed, the real economy globally, I think oil could be just sort of stuck, in this sort of trade range here. And any negative news, pretty sensitive. I think it's going to retest these lows, but we shall see. As I say, in terms of the dollar, it did have a bit of a push up initially, but it's just giving it back. And I think the dollar at this point, structurally, it's still quite weak. And especially we see today the antipodean currencies like the Aussie is in green. We see the New Zealand dollar a little bit of green, Canadian dollar relatively flat. So despite this sort of positive sentiment overnight, the US dollar finding it hard to rally strongly. What is kind of interesting, I just want to finish on this, is just gold. Gold gapped down yesterday. And we see that, it was very overblown, it was like an overblown kind of blow off top, overbought is what I wanted to say here. At this point, it becomes an interesting one of like, okay, where does gold get down to? Now, at this point, of course, you could start drawing, whatever you want. You could start drawing your fib levels and say, well, maybe there, maybe there. This looks interesting. You can start throwing on some moving averages. Maybe down here to the 20-day moving average, which would also coincide with more or less with a 61.8 fib retracement from this most recent impulse. Certainly 31.85 would be a good risk reward. I mean, something like 29.70 would be an amazing price. Of course, structurally, gold, is still, especially, sort of by Chinese customers and central banks and whatnot, there's still a huge demand for that. It's difficult to forecast. Silver, on the other hand, enjoying this more sort of risk on sort of sentiment. So what we're starting to see here is that the gold silver ratio, which had sort of blown out, very significantly up around the 100 level. In fact, let's have a look at that. I haven't looked at that for a couple of days here. So you can see, yeah, it got over 100. And I don't know if you remember, but I was speaking about this a couple of weeks ago and it was trading in this range. And every time it got to about 92, you can see here it was forced out. But gold has really popped a lot higher, trading to historically very high levels here. In terms of its premium over silver. You can see here on a daily chart just how sort of overextended that was. So now silver playing a little bit of a catch up, and that's normal because as we know, silver has about 55% of its usage is industrial. So the extra positivity in sentiment this morning is going to be positive for silver. And that looks as though nice little sideways consolidation could be building to break out. Finally, just want to have a quick look here at copper, which continues to be strong. Again, no surprises if the Chinese and the Americans are sort of, saying nice things about each other and the potential to sit down to sort of negotiate. That is a positive in terms of sort of sentiment, and copper will like that. From a technical perspective on the front contract here, it is breaking out. It is above there. Let's keep an eye on that and see if that's sustainable, if this sort of blows off a little bit. But definitely at this point, this looks, it's a positive trend in copper as well in terms of the industrial metals. Okay, guys, I'm going to leave it there. As I say, in terms of the data, we do have not so much hard data. We do have the American global PMI coming up at, I think, 945. Yeah, 945 today. So again, this is the April numbers. And of course, when Trump announced his sort of tariff stuff, that was April the 2nd. So in a certain sense, this is some of the first information we're starting to get in terms of the US about sort of April numbers. Again, this is survey data, and we've had this big sort of difference over the last few months between the hard data actually remaining relatively robust and the surveys being pretty weak. So it's going to be kind of quite interesting to see here whether that holds up or not. What we're expecting here is manufacturing down into contraction, 49. Services still to remain strong, but less than last time, and the composite just to be a little bit less than last time. So it's going to be kind of interesting to see here. If this comes in very negative, will this put a bit of a dent in the sentiment? On the other hand, if this comes in even higher than expected, it could be an extra sort of positive today in terms of the equities and whatnot. Just scanning through some headlines. Nagel, meeting my meeting best. Bundesbank can't exclude German recession. Okay, not a huge amount there. Okay, I'll leave it there, guys. Have a great day. As I say, PMIs at 945, and possibly even more important in terms of direction, and I suspect he will try and pump the market a little bit, is Treasury Secretary Scott Bessent, and I believe 10 o'clock or mid-morning. That'll be kind of interesting just to get a sense of where the White House is at the moment. Thank you very much, and we shall keep on talking. Thank you.